Goodwill. You might want to take an accounting class, but basically goodwill is an accounting technique that is GAAP. It's generally accepted accounting principle, so you have to do it. You need to use GAAP if you want to beat the rap. So when you buy an asset in excess of book value, the accounting system doesn't have a great way to do that. So you debit cash and credit goodwill. Or the old way to do it would be, or another way to do it would be if you debit cash and debit shareholders' equity. But theoretically, if you were willing to buy a company for more than book value, there is a mechanism by which you can reflect why you did that. You didn't set the money on fire for fun. You did it because you wanted to create some kind of benefit for your company. Robotics and technology for retailers. Okay. An automation system. I'm going to call this an industrial company. I could argue it's a hardware company or something, but let's just leave it at industrial because I got to put everything in different boxes here. Symbotic. I've never looked at the stock in my life. $17 stock in Wilmington, Mass. A whole bunch of share classes, interestingly. So I assume these are all worth the same amount, or they all have an equal claim on the assets of the company. They just have different votes. In which case, this would be a 10 billion cap. Did we do a split or something recently? Let's see. Yeah, 10 bill cap sounds right. Look at the size of the revenue. Want to make sure that, yeah, we're getting the wrong shares outstanding information. Not uncommon. Let's see if there is, let's see what Google says. Oh, they got it right. They got it right too. I'll have to check with their vendor. All right, about $1 billion in cash, no debt. Is this the old company Symbol? Symbol Technologies? Let me see. No, Symbol got bought out by Zebra. RFID. Okay, so very low margin hardware. Interesting. You can see they sell the system for close to the cost of the system. So system revenue was 472 in Q2, and system cost was 407. System COGS, at least. The software is probably higher margin, but they don't sell much of it actually, so never mind. And the services are also low margin, so all this stuff's low margin. I'm just going to do all COGS. Let's see. Doesn't seem, seems expensive for a 10 billion cap. Something's wrong here. Maybe because it's growing so fast. Maybe they have a lot of cash flow. We'll take a look in a second. But my spider senses kind of are going off. Okay, let's see if they have cash flow. Cash flow from operations, okay, is positive, so, but I'm assuming they have CapEx. Okay, they're still free cash flow positive. Okay, and the revenue is obviously growing very quickly. You can see that the revenue, 58% revenue growth, pretty insane revenue growth. But when your margins are 17%, and actually 14% last quarter, I'm not sure all the revenue growth in the world helps you that much. This is for the 9 months ended, so this is basically pretty close to the year. So this is not Q2. We have to get their funky calendar quarter stuff figured out, what they call this fiscal year. You can kind of make up whatever fiscal year you want. You can call it, this is the fiscal year for 2028. You should see how they do it in Japan if you don't know already. Okay, so what is this business? Oh, they were SPAC? Warehouse Technologies. Market's getting creamed, man. JP Morgan's down a bunch. All biotechs, of course, are down. A lot of beta in biotech. Man, Ionis is down 12%. I gotta check out why. Oracle's up 12%. Did Oracle report? We gotta go do the Oracle numbers. Okay, so this stock has melted down from like 50 to 18. Okay, so they call that Q3 24. Oh yeah, I have to do more coding tutorials. I just don't have the time. I'm busy. Okay, so they said next quarter 455 to 475. Ooh, that's probably what caused the chaos. I mean, this looks like a short. I always feel bad if a goodwill user is asking me, what do you think of the stock? And I'm like, oh, it's trash. I hope that I'm not telling them their favorite stock is trash. By the way, like, it takes me, I can't come up with a stock pick in 5 minutes, you know, and I hope that everybody appreciates that. It's pretty hard to do. But I do like to learn new companies, and it's fun to do so. And I give you some thoughts maybe you didn't think about before. But if it's a biotech stock, you could take to the bank. National Bank of Albania. Yeah, Cassava's like got to be one of the biggest dogs of all time. I don't understand the people who own the stock. The big guy who I had that call with, he blocked me. He's a sensitive, very sensitive man. Look, I don't want to lose $70 million either. I wouldn't want to lose that. Move on, bro. And knows absolutely nothing about biotech, talking about open label studies. I got a bridge to sell you if you think open label studies are going to be useful. In fact, I got several beautiful bridges for you. Analysts don't, so analysts, I guess analysts do know the stocks inside out, but they don't have any investing judgment, right? So they look at a stock, they're not really sure if the stock will go up or down, as very few people are. It depends on what the portfolio's investing objectives are. Everyone wants the stock to go up, stuff like that. You know, some people want to trade, some people want 10x, some people want a long-term investment. Everything's a little different. I totally don't get it, Kuba. I don't think he's worth like billions of dollars. And I know guys worth billions of dollars, and they don't put 70 mil on a random stock. They don't know. Like, this doesn't make sense. So I don't know if he's worth, you know, maybe 200 mil. He's got a huge chunk of his portfolio in there. This is bad wealth management. I think he's just being, he wants to be able to be like, I did great in software, which, you know, hats off to him, man. I'm sure he's very good at what he does. I'm new in the software business myself. So maybe I can learn from him, you know? The same way I'm new to the software business, he's new to the investment business. And especially the biotech investment business. Put 7 mil in and just be quiet and see what happens. If it works out, great. Maybe next trade you can put 35 in or 70 in, but start out with 7. I started out, how do you start out looking at biotech companies? I wouldn't read a book. I would just read every 10K I can. So they don't really talk about their business at all. It's like, but this doesn't look like a $10 billion company. It doesn't make any sense to me. This could be a good short. I do want to like figure out what's the product, and I'll look at that in a second, I guess. But yeah, I think it's funny because like every message board idiot on Cassava thinks that there's like some weird conspiracy. I was watching this video. I'll show you this video in a second. It's really crazy. But like, there's no conspiracy for Cassava. Like, nobody has the time for that, to go on Yahoo message boards and sit and write freaking negative information. Like, what are you, crazy? You think like there's, who do you think has time to sit there and do all that stuff? And who do you think they're trying to trick into not buying the stock? Big money doesn't look at Yahoo message boards. It's just hilarious like how warped that perception is. Like, I feel bad for these people. Where do you think everybody's like, how do you think other people are investing? Do you think, okay, well, step 1, I'm gonna go on the Yahoo message boards. Step 2, I'm gonna check out Twitter. Yeah, so I saw this video yesterday. It was really bizarre. Let's watch it together real quick.
Thank you for taking the time to listen to my open letter. I got a lot for you. Let's dive.
He looks like a broke Joe Rogan. So this guy is I guess a Cassava stockholder? Oh, his name is Joe Springer. He says he's the best stock analyst of all time. Okay. I thought that was Warren Buffett, but you know. He's got 4,000 subscribers, which isn't a lot for the best stock analyst of all time. Anyway, so the new CEO of Cassava writes, taking on this current challenge is not about making the share price go up or trying to silence the company's many loud skeptics. Those things will take care of themselves if the company focuses on job number 1, which is to make a drug. That makes sense. That's smart from the CEO. He's right. The skeptics don't make a difference. They're not going to make the drug work or make the drug fail. But this guy really doesn't like that.
You yourself know that that's not the case. This is from 2006 where you...
So he blames the old drug, which was like a pain drug, which I remember pretty well. So he knows that the FDA is out to get them. And Purdue stopped that drug from being approved.
Well, acting like we're in a fair environment is the difficult way.
So this guy's convinced that there's some elements aligned against this biotech company, of which, by the way, there's 3,000 or 4,000 biotech companies. It's not like there's one, that everyone's against or something like that. And I just don't get it. Like, everyone else is fine in the biotech ecosystem, but for some reason, everyone's picking on Cassava.
Rick, my friend, you are a Pennsylvania strong competitor.
What?
Corruption that was the biggest problem, and it's...
Corruption is apparently the biggest problem for this drug company.
Only worse now. Corruption is our greatest enemy.
Molecules can't be corrupt. They just are what they are.
The way we've been treated since then shows us...
This is not the guy, thank God, with 70 million in Cassava. This guy will never have 70 million cents of something, or 70 million yen. It shows you what the average mentality is for... This is a 40-minute video. Imagine watching this. It's about the Clintons for some reason. It's about Ryan Cohen from GameStop. Oh, wait, here are our enemies. Mossad. Murderous trillion-dollar companies like JP Morgan and Lilly. Murderous.
And that's not all. We're up against trillion-dollar, allegedly murderous corporations like Lilly and JP Morgan.
Yeah, so that's Cassava. So, when you play poker, everyone says you got to find the good game, where everyone else playing at the table is an idiot. This is the good game. That's all you need to know. Sometimes investing is that simple. Bet against that guy. I will give that guy money just to keep giving me stock picks. Just keep them coming, buddy. I know that last one didn't work. Give me another one. Maybe Goodwill will do something like that. This guy probably has $5,000 in the stock, if that. Mossad does take down stocks, I have to admit. When I was on Wall Street, we met with the Mossad Investment Securities Analysis Committee. And, we'd pitch our stocks. We'd say, please, Mossad, don't delete our company. And a bunch of Israeli guys be sitting around the table all right, Shkreli, maybe. And basically every company on Wall Street has to go through that process. Some people say you have to go to get an underwriter and go do an IPO and get an audit opinion and all this stuff. No, you just got to check in with Mossad. Look at this dilution. What? Imagine running a publicly traded company and you sell 10 million shares a quarter. 60 million shares outstanding? Let's have 70. That's too much. But let's do some more. Let's get 80. Let's have 90. Let's have 100 million shares outstanding. But they must have done a split or something, right? Or these shares are convertible. Maybe we have the right market cap. Because it says here, basic and diluted. They had an investor day. I want to look at that. I'm interested now. This thing's piqued my interest. Not usually, but a lot of times stocks people want me to look at are kind of boring, or there's no follow-up I really want to do. This one's kind of bizarre. Symbotic. It's like this. Look at this. The shares outstanding is just so weird. The growth is insane. So 1, what is their product? 2, how many shares outstanding does this company have? And that's such an important, simple question, and it's usually pretty easy to answer. But in this case, they have all these share classes, and sometimes share classes are convertible into each other, and there's all this mess. So let's see what these share classes mean. So at least at the time of the 10K, okay, they still had this Class A, Class V1, and Class V3. Class A, 83 million shares outstanding. Class V1, 65. Class V3, 407. Sometimes in an acquisition or something like that, you'll give. Was I around when the great financial crisis? Of course. I was around for the dot-com bubble, both the inflation and the burst. I was around for the great financial crisis. Come on, Shkreli is age old. All right, so let's look. They're talking about what their business is. They develop end-to-end solutions for supply chains, automate the processing of pallets and cases in large warehouses. Okay, so it's warehouse tech. And I think you have to like do the whole platform. Usually it's not too easy. Mostly for retailers. Looks like Walmart. Okay, so they have a bunch of business from Walmart. 23 billion in backlog. Wow, a lot of big customers here. So I guess they own this thing or do business with it or something. Interesting, huge backlog. I mean, it makes sense that warehouses are becoming very technical. I mean, Amazon's probably all this stuff and better. Big customers, Walmart. I wonder what percentage. Oh, Walmart's investing? I like that. Okay, so the CEO owns the grocery wholesaler. Interesting. Some related party issues here. Okay, let's see. Finally, in the fine print, we find what we're looking for. The dual class structure of our common stock has the effect of concentrating voting control with the symbiotic founder, who I assume is Richard Cohen. Certain family members and affiliated entities, this will limit or preclude your ability to influence corporate matters. Our V3 common stock has 3 votes per share. Okay. Class A and V1 have 1 vote per share. Okay. Class 3 converts to Class 1 in certain situations, including automatically 7 years after. Richard Cohen owns all of the Class V3 and 90% of voting matters, so you can't kick him out. I just don't understand why they don't include all of the shares outstanding in like diluted shares or something. Kind of an overly complex corporate structure. With these closely held companies, it's sometimes very squirrely what is going on. You can see it's like very low margin. It's not like this is like super scalable or anything. I mean, when Walmart's your big customer, obviously they have a nice roadmap to serious growth. I mean, I'm assuming that's what people are excited about, but it is a large market cap when you include Richard's shares, which obviously you have to include. He's not doing this for fun. I will say they do have positive cash flow, so they've doubled revenue every year so far. That's pretty baller right there. Pretty hard to do. Okay, so they have here, isn't that fascinating? They only say, instead of earnings per share, they say earnings per Class A share. And it's like, well, wait a second. That's only 20% of all the shares. There's a lot of shares. Okay, so here's cash flow from operations. Okay, so free cash flow for the full year, fiscal year ending September 2023. They're ending their next fiscal year in 20 days. But at least for that time is 215, which isn't that bad. There's a very thick plot here. It's not obvious at all. Okay, Warehouse Technologies was founded in 2006. That's basically this company. I mean, if Walmart finds it useful enough, I mean, you got serious customer concentration risk, right? All Walmart has to do is be like, look, we developed our own stuff, which I can imagine they would want to do. Or, yeah, look at customer A, has to be Walmart, right? Customer A is 88% of revenue. Is it Walmart? May not be Walmart. Yeah, the stock's gotten killed. Can you imagine the valuation back then? It was like 40 billion or something. Oh! Do you see that? Class V1 and V3 common stock are non-economic. They're only voting shares. Turns out that Goodell has it right, and those guys have it wrong. I guess it depends on how you think about it. To me, I would not count V1 and V3 then. That's amazing. So those are only votes. Okay, so the market cap's a little different now. 102. Oh, now it's interesting. This is a weird Symbotic. The company's called Symbotic. It's this bizarre warehouse technology company, but it looks very, very interesting. It's only $1 billion market cap, and they have a ton of cash. Walmart's pumping money into the company. The revenue is growing like crazy. I mean, this is kind of neat. I thought they had all the V shares they're just voting shares. They don't participate in the business. The CEO owns most of the company, which I think is usually a pretty good thing. So you're basically partnering with this guy. Profit margin on a gas is massive. Yeah, Walmart would probably buy them out, right? That's the thing. I don't think Walmart relies on them that much. You know, they've been distributing products for a very long time. You know, they're a high-tech company too. So it's not like they're not new to this. They're true to this. When I thought they had 600 million shares outstanding, it was a little bit different. But at 100 million shares outstanding, oof, you get 900 million EV for a profitable company. This is a profitable company. TTM free cash flow. I'm not even sure. I mean, revenue's growing like crazy, so this might be the find. Wait a second. Their guidance was 290 to 310, and they came in at 390 that quarter. Wow. I like this Symbotic. This is one to watch. It fell a ton, but it may be the right value now, if that makes sense.